So the platform that I'm using right now, it's called TradingView.com. Some persons may use CTrader or MetaTrader, but I prefer to use TradingView because it's very clean. Now, to place support and resistance, you want to start from a higher time frame. There's a thing called top-down analysis. So when you're reading, you'll learn about it. So essentially, you want to zoom the chart out to about a year worth of data, right? The more recent the data is, the more relevant. And you want to look for areas on the chart where the price turn. Like it go up and can't go up no more, or it bottom, it can't go down no more, all right? So let's begin. Now, some persons may say that support and resistance is a line or it's a zone. I personally think it's a zone. It's not a specific level in the market. When you're placing support and resistance, you should look out for psychological numbers. Psychological numbers are essentially round numbers with zeros at the end. So if you look at the left and right hand side over here, you'll see 38, 1.3800. All these numbers here are psychological, meaning that persons tend to take profit or stop loss around those numbers. So zoom out to about a year, 2 years worth of data, and then you will look for turning points where the market reverses. So this, you can see the market came down right here, stop right here, then started to go up, right? Uptrend, it's bullish. Put the stop right here. Attempt again to pass right here, couldn't pass right here, right? And continue going down. No. So we would say that this area right here is an area of interest, an area you should pay attention to when price reaches there again. And the reason why we place these zones is because we don't want to trade blindly in thin air. So you want the best chance. Trading is a probability, and to increase the probability of you winning the trade, you want to place it at these zones, these supply and resistance zones. All right, so turning points where the market turn or reverses. Here will be one, right? And we say right here, down, went back up. So place it blindly right now. If it jump out at you, it's there. If you have to look for it, it's not there. So it's an area, it's visible just like that. And another way you can do it is you can click on the line chart and use the line chart to place it. The line chart shows you the closing price, which is actually more relevant. So you place the support and resistance on the daily. So far, and again, it's not a straight line, it's actually a zone, an area like this. And as you can see, price respect this area right over here, right? This was a turning point, basically. That's a turning point. And let's say we didn't know what is going to happen on the right hand side. So you go until price comes back up. Looking for price to come back up to this area, and let's see what happens. Okay. So price tend to reverse or provide a trade opportunity around these zones. So you should practice how to place support and resistance. It's very, very important. Now, what you should know is that when support is broken, it becomes resistance, and when resistance is broken, it becomes support. Now, let me show you what I'm talking about. Now, let's say this is the resistance area. This is resistance. All right, price goes up here, can't break this, come back down, retest it, attempt to beat it again, can't break it. All right, now this is support right here, the floor. Price attempts to go through it, then fail, went through it. When it went through it, came back and retest it again, and try to go back up. But this is the reason why I'm saying that support always becomes resistance most times. This is because of how the trend is structured, where you make higher highs and higher lows. So this would be a low high, and when I swing up, this would be higher high, now lower high. So it always tends to come back to test the zone, always, most of the time. You can see comes right back. And when it comes at the zone, that's your key, the trigger to sell or to buy. Now, we always want to look for selling opportunity at an area of resistance and buying opportunity at an area of support. How do you know if the support area will break? How will you know if it will give you a sell or a buy? Strictly based on price action. And that's for next week. So for now, just want to go through and play some support and resistance zone. And we always want to place it on the higher time frame. All right. Even the zones from 2017 is still relevant in 2019 and 2020. Okay, these zones are all the way from back here. 2016. It's an era. This is an era of resistance, right? Resistance. This is 2016. Even till this day, it is still relevant. So you should practice how to place support and resistance, right? Does anyone want to volunteer to take over my screen and place a few support and resistance lines or zone? Anyone?
Not me. I don't feel I'm ready.
Basically just join lines or zones or turning points. So this is AUD USD, Australian dollar versus US dollar. As you can see, price went up make a turn right here back down. You're looking for turning points. Turning points. Looking for turning points. So, what we learned last week, we learned different types of trend, right? Bullish trend, bearish trend, and consolidation. What kind of trend would you consider AUD USD to be in? Anyone?
Downtrend.
Pardon me?
Downtrend.
All right, excellent. Why would you say it's in a downtrend?
Kind of a holy, but higher highs, higher lows, and they keep breaking.
Downtrend is not higher highs, higher lows. Lower lows.
Sorry, lower lows, lower highs. Sorry about that. You might do the other things while I watch the video. Yeah.
All right.
So low highs and lower lows. And also you can see that it keeps breaking support, making it resistance, then going down again to support. It keeps breaking support, going down.
Okay, excellent. Now, for the recent period, right here, whose trend do you think this is?
Uptrend.
An uptrend?
Uptrend, yeah.
The uptrend, consolidation, or downtrend?
If I'm just using from where from my point of view, from where it's just showing went up, to me is a more of an uptrend. But if you broaden the chart, you see it look a bit more.
All right, remember, you see, this is why it's a zoom out to a year or two worth of data.
Yeah, from this point of view, it's basically ranging.
It's a downtrend, right?
Huh?
From this perspective, it's a downtrend, right?
Yeah.
And when I zoom in directly now into the current perspective, data uptrend.
Yeah, within this range, it was creating high highs and higher lows.
Okay.
Look a bit broader, it almost look like it's ranging. So, like I said, it depends on what you're looking at it and what.
Okay. I say that this market is still in a downtrend. The definition of a downtrend is market making lower lows, lower highs, right? Continue going down. This is the last push down, pull back, push, and pull back. The market did not break above this zone. So until it make a higher high, this right here is just a drop in the bucket. And it's the reason why majority of traders lose money, because they're only focusing on the smaller piece of the puzzle. You can buy right here, yes, there's buying opportunity right here, but you always want to be trading in the direction of the trend. So the trend is down. And if you're having difficulties figuring out the trend, it's basically a 1, 2, 3 move. It's 1, 2, 3. It's 1, 2, 3. Yeah. 1, 2, 3. But if you can't do that, you can use an indicator. The recommended indicator I would suggest is the 50 moving average. And you guys will learn about this shortly. Now the 50 MA basically look on the last X amount of close to determine that trend. You can see prices in a downtrend. All right. Now, remember earlier I said that you place support and resistance here to get an understanding of the area you want to buy or sell. Now, when price reaches that area, right? How would you know when to buy or sell? That's where multiple time frame analysis comes in. So you always want to start at a higher time frame, right? We say that we want to sell at resistance and buy at support. Let purple be resistance and red be support, right? Now, we start on a daily chart. For multiple time frame analysis, it constitutes of 3 time frames, either monthly chart, daily chart, and monthly, weekly, and daily 4 hour, 1 hour, etc. It's 3 charts going downward. All right. So let's start on a daily. We'll then go to the 4 hour to get a more diverse look into the chart. So we place the support area and the resistance area, right? And we say that we want to buy at support and sell at resistance. And remember, resistance is the ceiling, support is the floor. All right. Now, let's say we wait, right? Price is down here from October 19th, and we place our support and resistance zone on the daily chart, and we wait until price comes to that area, right? When price comes to that area, then we look for a sell or a buy. In this situation, price managed to come to the area December 31st, exactly New Year's Eve. Price is at the area. Would you say price is at the area right now? Hello?
Repeat the question.
I'm asking you, we waited. Price was all the way down here from October, right? At support. And based on the fact that we place our support and resistance line on the daily chart, and we're now on the 4 hour chart looking for an entry, and price manages to make its way to resistance December 31st, right? What would you do when price reaches the resistance area?
You would sell at that point and reach the resistance if you get a proper confirmation.
Okay. All right, awesome. Excellent. So now we waited from October to December for price to reach this zone. When price reaches this zone, right? we're looking for an entry. And this is the area that we're looking at. This price came up. I will tell you guys, this is where you want to sell. Sell at distance. All right. Now, price is at resistance. You'll then look for an entry. Did anyone read the PDF I sent about the candlestick formation?
I didn't get the chance to know.
Didn't get a chance to?
I remember I got a preview of it, but I didn't get to sit down and go through it completely.
Okay. Now, we're going to come back to this eventually, but that's putting this out there in the air right now, so you guys can rewatch this video and you can understand it. Now, we said that when price comes to an area of support or resistance, we're looking for an entry. And what will determine that entry is price action. And we talk about price action in the previous webinar. Now, an example of price action is candlestick formation. We have Morningstar. It's a really disgusting Morningstar. It's a three candlestick formation. We have AMA, inverted AMA. We have a lot of them. I would suggest that you guys read the candlestick formation, because this is where you get the entry from, how to enter the trade, whether it be in the money and out of the money. Now, price is at support and price is at resistance, right? We waited patiently on price, which is resistance. For those who were reading, does this look familiar to anyone?
Repeat that question.
Yeah, does this look familiar?
Yeah. A reversal pattern.
Okay.
You just say all of them.
All right. This is a evening star pattern. A reversal pattern that shows that price is gonna go down. Now, how do we know? Remember, trading is a game of probability, right? We say that we want to buy at support and sell at resistance. This is resistance. And how will we confirm that we want to sell and that price will not just break through this and go on multi business? We look for candlestick pattern. And this is a beautiful evening star candlestick formation on the 4-hour chart. And as you can see, price did sell off tremendously afterwards. You can even go a step further and go to the 1-hour chart, which I prefer to do my entry on. And you'll also see that when price reaches there, here are several patterns you can see to confirm that it will sell off. Bearish engulfing pattern. This is actually a head and shoulder pattern right here. This is the retest of the neckline and it sell off. So I would definitely recommend that you guys go through the information I sent you in the group. What I want you to take away from this is you should place your support and resistance zone on the daily chart, the higher time frame, then wait for price to reach that area. Once price is at that area, you will then drop to a lower time frame and look for an entry, such as 1 hour, 4 hour, 50-minute chart. The entry will be based on candlestick formation, which is what I sent to you in the group, a PDF of all the candlestick formation. Now, if you guys want me to go over how to draw support and resistance, again, let me know. Do you have an idea of how to draw support and resistance?
So far.
Okay. Many persons will say it should be on the wick, in the body. That doesn't matter. It really doesn't matter. Based on my user trading, it doesn't matter because you have fake outs, you have a lot of other stuff that comes into it. So to avoid all of the confusion, I would recommend that you go onto the line chart and use the line chart to place the support and resistance zone. Why? As you can see, it eliminates all the noise. And if you want to fine tune it, you can place minor support and resistance, such as here. And here. You always want to place the latest. So this is the latest. So essentially, we'd wait for price to come back right here and see what's going to happen today, because the market is open right now. All right. Any questions?
Not from my side.
Remember the website I recommend to learn from basics. It's TradingView and I'm sorry, babypips.com. You can go to that website and it will teach you everything you need to know from elementary up to professional. See, this is the first, what is Forex? Jump into how to trade Forex, when can you trade, etc. These are actually videos. These are not notes that you can, well, it's both. You can download the notes and you can watch the videos. All right. Any questions?
Not from here. Oh, everybody is so quiet. Everybody all right?
No question.
Do you understand the support and resistance concept, supply and demand?
Yeah, I kind of understand it a little, but I'll watch over the video. I think I'll get it if I just rewatch the video.
Okay.
I'm coming.
All right. Okay. Remember, this is not something that is a set way how to place it. Hence the reason why it's a zone and not a straight line. But to be more accurate, I recommend that you use the line chart and get acquainted with TradingView. Use the line chart and place it as zones. And once price reaches in the zone, then you can look for your entry on a lower time frame. So it's not just a single line. When you're placing it though, if the price is around the psychological number, which is like 65,500, you can move the line nearest to it or place your entry there, because persons tend to put their stop loss or entry around even numbers. I don't know why. just human nature. Okay. All right. So it's pretty simple concept. You draw the lines on the daily chart, then you drop to the lower time frame and look for an entry. As I said before, the entry is in these candlesticks, confirmation, and I send that to you in the group. I will go through that another day, and I will go through trend lines and trend line break another day. All right. Okay. Any questions? As you can see, the market is open right now, and indeed, price is reversing from the zone already. So, just to show you that the concept is legit, it's working. All right, thank you guys for attending. See you guys
Next week.
Bunch of meeting Wednesday also. All right.
All right. So next week.
All right. Yeah. Thank you. Goodbye.
Bye.